You know that there are some parts of the market that have had enormous moves. Let's just think about what's happened with solar energy recently. Names like NEO and RUN, you can't make a case that those are investable right now. But there are other parts of the market that have been pausing, even technology stocks. Facebook, Google, two examples, Microsoft, they really have been settling in, forming a base, perhaps ready to make another move as people have moved out of the large cap growth names that helped fuel the market in 2020, and they moved into reopening names, cyclicals, some of the energy and financial plays. So we think that having an approach that includes some reopening, some growth, some cyclicals, and maybe a couple of names that are momentum driven right now because they're doing so well in terms of stimulus planning or their technology is really a good approach to have in this market.
The last 3 months, we talked about it earlier on the show, the last 3 months have seen kind of like this real resurgence in the so-called value trade, right? That the beaten up names, the ones where price to earnings valuations are low compared to the overall market, the ones that pay higher dividends, the ones that are more defensively oriented, that sort of thing. Is that a trend that you see playing out? And if so, where exactly do you then put money in value type names? What is on your value shopping list right now?
That's a great question. So mostly we were growth investors last year. We began to move into a couple of names such as American Express. Well, American Express has been a growth company, but of course, all of their business sort of disappeared. 20% drop in 2020 because of spending on credit cards for business and travel. The stock had double earnings in 2021. Moving into 2022, we think this is a very, very good place to put money today. We have not invested in energy stocks. I know they've had a big move. I think that's great. The price of oil has gone up. But that's such a small part of the S&P. It can take very little money to move energy stocks high, and they're up about 30+%. So we're slightly concerned that that might have gotten ahead of itself. On the financial side, I mentioned American Express. SL Green is another value name. It's the largest commercial real estate owner in New York City and Manhattan. The stock sells for under 10 times earnings, trading at a big discount to the value of the properties they own. We think those are two really interesting names right now. United Healthcare. On the healthcare side, you know, healthcare was an underperformer in 2020. Not names like Moderna, of course, or some of the vaccine names. But we think there's room for a name like United Healthcare. We own Health Equity. That's health savings plans. Gets a kick from an improvement, somewhat of an improvement in interest rates. On the financials, again, Charles Schwab, that's an attractive stock, even though it's had a big move. Some of the big banks last week up or down, you know, there's interest rate. I think the banking business has been good for them, but they've got some headwinds because, of course, there's some problems with commercial real estate. Interest rates are not moving up a lot, but they've had a very nice run over the past month or so.
Now, there's also this idea of a reflation trade, Carrie, this notion that if things get going, we're going to have to build more things, spend more on energy. You mentioned energy trade before. I wonder how much the home improvement or construction type trade is playing out, and do you have plays there as well?
Yeah, that's a great question. So an interesting dichotomy is that in 2020, some of these stocks were considered COVID plays. We own Home Depot and Sherwin-Williams. They benefited from people being at home, doing projects around their house. The CEO of Home Depot said he thought every American family seemed to be building a deck by themselves. But that's continuing into 2021 because people have moved. They have new houses. They have to spend money. They're painting their houses. Sherwin-Williams was great last year, and we think that that can continue into this year because of the renovations that people are doing on the new places that they live in. So, yes, I think that that can continue again in 2021.
All right. And then one last thing. We got 10, 15 seconds here, Carrie. How about the construction related names? Pure Play, Cat and Deere. Are they names you want to own?
Yeah, well, those have been fantastic stocks. If you look at the charts, they look like some of the hottest electric car companies right now. I think some of that's been pulled forward. Everyone expects an infrastructure play. I think I would let those rest a little bit before putting new money into names like Cat and Deere.
Shepard Smith here. Thanks for watching CNBC on YouTube.